Palantir's business has been thriving, and investors have been seeing the benefits of that as a result of the increase in the company's revenue and cash flow and the increase in the stock price. So, I wanted to take a deeper dive into Palantir's financial statements so that investors can better understand what's driving that success, what's underlying this stock price performance, and get a better understanding of this incredible business.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Right. So I wanted to discuss and elaborate on this explanation from Palantir on how it generates revenue from their on-premises software sales. And I'm going through the company's latest 10Q statement. This is page 30 if you want to follow along. And I like to get these financial statements from finchat.io. They aggregate a lot of the companies that I'm following, and I can get all the data in one place, and I really appreciate that. There's a link in the description for a discount. So the Palantir management team saying that sales of their software license, primarily term licenses, grant customers the right to use their functional intellectual property either on their internal hardware infrastructure or on their own cloud instance over the contract term, and are also sold together with stand-ready O&M services. These services include critical updates and support and maintenance services required to operate the software, and as such are necessary for the software to maintain its intended utility over the contractual term. In other words, Palantir sells businesses the rights to use their proprietary license for their software. The company also provides other enterprises with the support to that software to make sure that software operates efficiently and effectively throughout the contractual term. So it's a sale of the software, but also sale of the support for the software. So if the enterprise has any difficulty, they can call Palantir and say, "We don't know how to use this thing. Can you please send someone to explain to me how this thing works?" And Palantir will send a team or an individual to the enterprise to help the company incorporate their software into their enterprise. And so to get the best use out of that software. So Palantir's cost of revenue primarily includes salaries, stock-based compensation, and benefits for personnel involved in performing the O&M and professional services, as well as subcontractor expenses, field service representatives, and third-party cloud hosting services, hardware costs, travel costs, allocated overhead, and other direct costs. But the company's cost of revenue primarily includes salaries and stock-based compensation for the people that go out and deploy Palantir's software. That's its primary expense. Sure, there's some other cost there, but for the biggest cost, it's the people that go out and deliver these services. And Palantir has said that because of the strong demand for its services, their expenses are going up. The cost of revenue is going up, and they plan on hiring more individuals, and they plan for their costs to be much higher here in 2025. So one of the reasons why investors have been so excited about Palantir stock is how quickly the profits are expanding. Of course, revenue is also growing in the most recent 3-month period, which ended March 31st, 2025. The company's revenue increased to 884 million, up from 634 million. And its operating income jumped from 81 million to 176 million. So while its revenue increased by less than 40% or 39% to be precise, its operating income increased more than double from 81 million to 176 million. That's what investors have really liked about Palantir is the company's ability to expand its profitability at a rate that's much faster than its revenue growth. And if I share with you this chart here from FinChat.io, you can see the company's operating cash flow to sales ratio has been expanding rapidly from 11.7% in 2022 all the way up to 42.8% in the most recent trailing 12-month period. Still, if I were to find one blemish on the company's financial performance, it's the increase in the cost of revenue. So typically, and I see this across Palantir's business in almost every uh, item on its financial statement, except for the cost of revenue. And let me share that with you here. And this statement here is for the 3 months ended March 31st, 2025. And you can see the gross profit margin actually declined from 82% to 80% as a result of the cost of revenue increasing from 18 to 20%. You don't usually see this with a company that's growing like Palantir. And in fact, you actually see leverage across the financial statement, which you notice on every item in the operating expenses. So look at sales and marketing, research and development, general and admin. You see those declining as a percentage of revenue. What this is called is a common size financial statement. And I teach this at university when I teach corporate finance. And what you look for is when the company's revenue is increasing, you look for all of these items as a percentage of revenue to decline because these costs should remain relatively fixed. And when revenue grows and the costs remain fixed, you create leverage or a bigger gap between your sales and your cost. And you see that sales and marketing from 31% down to 27%. That's good, right? Because this is as a percentage of sales. So the cost of sales and marketing as a percentage of sales are declining, and that's a good thing. Research and development, similarly, down from 17% to 15%. General and administrative, down from 21% to 18%. So you are seeing leverage across the business, except in the cost of revenue. And management has said this cost of revenue is likely to increase for 2025. And that's really the only blemish I can find on Palantir's performance over not just the previous year, but perhaps even the previous 2 years. Total operating expenses overall declined from 69% to 60% as a percentage of revenue, which is great, right? That's creating the gap, and that's what's creating that more than doubling of its operating income, even though sales only increased by 39% because most of the cost remained relatively flat. And then as sales is increasing, that's creating that leverage, which is creating that increase in the company's operating cash flow, increase in the company's operating income, which has been great news for Palantir stock investors as the income from operations has increased from 13% in the 3 months ended March 31st, 2024, up to 20% in the 3 months ended March 31st, 2025.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.